Welcome back. You're watching Startup Central with me, Nayantara Rai, working from home. This is the only show of its kind in Indian television, dedicated, of course, to startups, technology, innovation, disruption, entrepreneurship, anything to do under the new economy. Now, we've seen, of course, old economy companies being very interested in startups. They have no choice, right? It's the new norm, it's the new world, and they have to innovate as well. They're also doing it inorganically. We've seen a whole host of listed companies, for example, take positions in the startup universe. There's been a big trend of that actually in the auto sector. Bajaj has done it, Hero Moto has done it, and you started seeing that in the fintech space as well. And my next guest today is from the listed universe, Niyogin, who has acquired 51% stake in a fintech startup called iServeU. The Niyogin stock today, incidentally, was up nearly 1.5% in trade. So joining me to talk about this, why a 51% acquisition of this startup is Rumit Dugar, the CFO at Niyogin. Hi Rumit, welcome to the show.
Hi Nayantara.
What are you hoping to do with this majority ownership in this startup? What does this startup do? What are the synergies?
Sure. So from our perspective, I think Niyogin FinTech is not so much of a brick and mortar or a traditional company. We ourselves are a digital platform which is focused on digitizing and solving for small businesses. And credit, incidentally, is one of the products that we do. From a perspective of this acquisition with iServeU, iServeU is a financial inclusion platform that is leveraging the JAM Trinity, which is the Jan Dhan account, Aadhaar, and mobile smartphone penetration to bring various financial products and services such as payments, money transfers, and cash withdrawals into the rural segments. So from our perspective, we see tremendous amount of complementarity in our business model, which is again a very platform-centric focused business model, which is through the Finance Professional Network, and what iServeU is doing with its market access platform into the rural India. So with a combination, we are going to have the products today, which is credit that we do, which is very customized transaction-based underwriting for the small businesses. We have a wealth tech platform already, which is Moneyfront, which is probably our best kept secret. It's got almost $100 million plus in asset. And now with iServeU, we get into the payment space. So we create the market access as well as the product combination of credit, wealth, and payments.
Okay, and do you agree that you are actually seeing a lot of listed stocks go down this route? You yourself at Niyogin, I wouldn't call it an old economy stock. You are, I don't know if on the fence, or would you call yourself completely new gen?
Right. So I think our journey has been very interesting because I think we are probably the only startup which did not do a typical Series A, Series B, VC, private equity kind of route. We straight away went to the public markets and raised startup capital from the public market investors. I think almost about 55% of the shareholding in our stock is large institutions. So I think to that extent, we are a very, very unique startup ourselves. I think if you have to solve for the next billion, then you really need to focus on how you're going to create a cost-effective market access as well as work on the product delivery. So with both Niyogin as well as iServeU, we are creating a very, very cost-effective market access. And I think you can see that in terms of our own market access. Today, on our platform, we have access to over 200,000 small businesses. On the WealthTech platform, we have more than $100 million of assets. And with iServeU, which is doing transactions on an annual basis at over $500 million. And interestingly, Nayantara, all of these platforms for us have grown through COVID. So both the WealthTech platform as well as iServeU, they have seen actually acceleration in growth and adoption over the last 3 to 4 months, which again sort of tells you that the inevitable is sort of got accelerated. And we're just focused on building and scaling these businesses.
So, iServeU has been processing transactions worth about, $500 million annually on its platform. while you've got the board approval, like you said, you're one of the few startups that decide to, go down, get listed on the BSE, NSE, and grow organically. Now you're looking at inorganic growth. You've experimented with the listing. Now you're going to have a tough job of a merger and a combination, making sure the work culture also fits, that there's synergy, that there's no redundancies, or that redundancies are taken care of. It's going to be a big challenge.
So Nayantara, this is our second acquisition actually. So Moneyfront, which is our WealthTech platform, is something that we acquired 1.5 years back, and that has got beautifully integrated into our own ecosystem. With iServeU, I think there's a very young team based out of Bhubaneswar in Orissa. We've been engaging with them, partnering with them over the last 1 year. We know each other very well. And in terms of culture, I mean, both us as well as iServeU, we are pretty much the same size in terms of the team, the average age. So I think both the cultures are very entrepreneurial. I don't think we see any challenges from an integration perspective. We've already had a very good, successful integration with our WealthTech platform, Moneyfront.
Okay, so you're going to pay about what, $8 million, if I'm not mistaken, for this. You talk about multiple product complementaries, whether it's credit, digital wealth, payments. What's the end game? It's your second acquisition. Are you only going to grow inorganically? How is all of this being funded? What's your end game?
Sure. So I think if I take a step back and look at it, what we are trying to solve is for the next billion. On one hand, with our finance professional network, what we are doing is creating a very cost-effective market access. So we already have a couple of products which are SaaS-centric, which is helping digitize MSMEs. We have a credit product, which is again organic, helping create custom solutions for their capital problems. WealthTech for us was an additional product line. And again, iServeU is an additional product line. So both of these acquisitions from our perspective have been to accelerate the product build out while we continue to build them organically. We are also quickly adding these new products to our fold and create a broad-based ecosystem. Because today, Nayantara, as I said, right, I mean, in the last 4 months, the amount of growth and traction that some of these platforms have seen, we have to really bring forward all of this product delivery and new product innovation to keep gaining market share and adding value to our consumers. So I think that's really the philosophy with which we are working with them. And again, if you see, we have acquired only 51%, so the entrepreneurs are still there. And there is the right alignment given that this is a cash plus stock deal. So we are also creating the right alignments to work together and create this ecosystem for digitizing these small businesses and consumers.
So here's wishing you and everyone at Niyogin all the very best. Thanks for this interview. We look forward to many more in the near future.
Thank you.
Now, we'll move on to a story that has just broken. India's IT and Law Minister Ravi Shankar Prasad has written a letter to Facebook's Mark Zuckerberg. Writing to the top boss, Ravi Shankar Prasad's aim has been to convince Mark Zuckerberg and inform Mark Zuckerberg that there seems to be a bias in Facebook India towards the opposition, which is now the Congress party. So in this letter, and here are some of the highlights, Ravi Shankar Prasad says the FB India team management not only deleted a few pages, but also reduced the reach. The reach of people who support right of the center ideology was thus impacted. Bias and inaction, outcome of political beliefs of individuals in Facebook India team. Goes on to say that Facebook must be fair and neutral to users of diverse beliefs and ideologies. It's a problem when Facebook employees on record abuse the Prime Minister and the Council of Ministers. Facebook-related leaks in media are a result of internal ideology war. Facts are being spun by selective leaks to try to portray an alternate reality. It's a problem when bias of individuals becomes an inherent bias of the platform. Misinformation about COVID-19 on Facebook went unchecked. Facebook cannot remain immune to local sensitivities. Facebook must put out country-specific community guidelines. Interference in political process through gossip, whispers is condemnable. Now remember, Facebook actually started the large investments of nearly 4 lakh crore rupees of FDI we've seen during COVID-19. $5.7 billion is what Facebook is planning to invest in, and is investing, and has closed the deal with the money being sent in Rel Geo. Facebook has large India plans. It has been investing in startups, whether it's a Meesho, whether it's an Unacademy, and of course there's that mega Geo platform deal as well, worth almost $5.7 billion. A massive controversy that broke out recently, where you've actually got the left-wing parties accusing Facebook of being pro-right-wing, about how the public policy head has actually been praising Narendra Modi in emails, playing a crucial role in the victory during elections in the aftermath of the 2014 verdict. So clearly this is a big controversy, but the big story is that Ravi Shankar Prasad, the India's IT and law minister, has written a letter to the founder of Facebook wanting clear steps. Facebook India to be sensitive, Facebook India to have clear-cut guidelines, Facebook India to start fact-checking, Facebook India to not delete pages that are leaning towards the Bharatiya Janata Party and the right of centre politics. This is a clearly developing story, and we at ET Now will be right on top of it. Well, with that, we're going to take another short commercial break, but stay tuned. We've got a lot more lined up for you on the other side, including, now we told you about Amazon's big step when it comes to delivering to homes in US with drones. Its competitor, Walmart Plus, is hoping to take on Amazon with a new offering. Stay tuned to find out more about that.